702. 702. Finance Feature.
16 minutes to 2 o'clock in our finance feature for today. We are having a conversation around trading jargon. So trading jargon 101 and breaking down the language of the stock market. We're joined by Mike Sithole, who is portfolio manager at Anchor Capital. Mike, welcome to the show. Thank you so much for joining us.
Thank you, Relebogile, and hello to the listeners and to the viewers.
So, Mike, we're going to, because this is 101, we're going to start at the very, very basics. What is the stock market?
Yeah, I mean, this is a very important subject, Relebogile, and thank you for actually picking it up. It's important that investors understand, what these terms mean. A stock market is basically a market or a platform in which buyers and sellers can sell shares. So, I mean, a good example of a stock market is the JSE, which is a market like any other market, but the JSE brings together buyers and sellers so that they can trade on shares in a way that is transparent, in a way that's regulated and that is safe.
Every time we think about movies, what is that, The Wolf of Wall Street, and we imagine the people standing all in one place looking at the massive screen showing the stocks and people screaming in the movies. But I have to be honest, there were moments where I'm like, okay, if they say the markets are crashing and all of those things, there's certain lingo that I did not get at all. So before we even jump into it, what are the absolute basics a person needs to understand about this? And let's use the JSE as the example.
So I think one of the basic things one has to understand is what a share is. A share is part of the company, which means, if you own some shares, let's say in a company like Standard Bank or ShopriteRite, you become one of the owners. Usually it's a very small portion that you own, but it is ownership nevertheless.
So
and
you
naturally,
own basically a brick of all the shops and head office.
Yeah. That's exactly the point. And so you participate, in the growth of the company, but if it struggles, you participate in the struggles as well. And naturally, the more shares you have, the more of the company you own.
Okay. And I mean, in terms of what and who determines the price of the shares, how does that work? So maybe we can use something that was quite known. I think at one point it was the Phuthuma shares that went out. There are many South Africans that own it. How does that kind of deal or system work?
Right. So that's a very good question there. So at a very basic level, what moves share prices is supply and demand. In other words, if there are more people that want to buy a share than want to sell it, the price goes up. If there are more people that want to sell the share than want to buy it, the price goes down. But behind that supply and demand are investors' expectations or opinions about the future of the company. And a lot of things can impact the future of the company. It can be the competitive environment. Maybe they're not making as much money as they used to make before. It could be a change in interest rates. It could be a change in government regulation. It could be the company's financial results. All these factors and others can impact what investors think about the future of the company. And that future of the company is then reflected in the share price that you see on TV.
So help us understand, we've spoken shares. What are dividends?
Right. So dividends is when a company pays their shareholders some cash from their profits. So a closest example that I think of when I think about dividends is if you owned a property and rented it out and you got rental income from it. So a dividend represents income from your investment.
As in after deductions. So the dividends are determined by obviously the profit that the company made.
Exactly. So they've paid for their expenses, they've paid taxes, and then what they remain with then they decide to pay their shareholders some of the money in cash.
Okay, then.
Now, the other concept.
Yes, go ahead.
Right. So the other concept maybe related to that is capital growth. So capital growth is really what happens to your shares as they increase over time. Your capital then grows. Again, if we go back to that property example, so say you bought that property for R1 million. 6 months later, you actually discover that it's worth R1.5 million. That 50% growth in your investment is capital growth.
Okay, so now when we think about the term portfolio, so if now somebody wants to say, actually, you're speaking about Phuthuma shares. I also in the post office did something, got something there, but I want to grow and diversify. Can you talk to us about what a portfolio is and what is the important terminology we need to be aware of around portfolios?
So a portfolio is simply a combination of your investments in one place. So if we think about, let's say, a stock portfolio, then you'll have different shares. If it's a global equity portfolio, for example, you may have shares in companies like Amazon, Microsoft, and so forth. And so your share portfolio statement will show you the companies in which you own shares. An important concept to keep in mind when we think about portfolio is that of diversification. And what that simply means is that instead of putting all your money in one investment, you spread it across different investments. And behind the concept of diversification is the idea of not putting all your eggs in one basket. So the idea is that, let's say, you're holding 5 baskets filled with eggs. If one of them falls, you have, the other 4. So you haven't lost, all your eggs. So it's the same thing with investments. If you've spread your money across different investments, when one of the companies struggle, the others can help limit the impact on your investment portfolio.
Okay, what is ETF?
Right. An exchange-traded fund is a fund that gives investors access to a basket of shares. So you buy that one ETF and it gives you access to a whole range of shares. So ETFs are generally, let's say, well diversified, and they make it easy for investors, even small amounts, to be able to access savings and investments markets.
Okay, then there are terms like bull market and bear market. Help us understand. How did we get here? What is a bull market and a bear market?
All right. So these are just fancy terms for that we use in the stock market to say markets are rising or falling. So a bull market simply means that the market is generally going up and investors are feeling optimistic about the stock market. Whereas a bear market means that the prices are generally falling and investors are feeling pessimistic. Now, the important thing for investors to keep in mind is that both bulls and bull and bear markets are a normal phenomenon in the stock market and in investing. So markets do go through these cycles.
What is the difference between, if you say, investing and trading?
Yeah, so that's another very important question. So traders, they tend to look to make profits from short-term price movements. So their goal is to make profits, let's say, in the short term. Whereas with investing, you typically identify good businesses to invest in, and then you allow time to grow those investments. And I think for South African investors, it's very important to think about investing as a long-term journey, because true wealth is created over time.
In terms of, we'll hear stories about people who'll say they handed over, X amount of million to South Bani to trade or invest for them. How does that work? That you would, are there individuals that are qualified? Like, I don't even understand how that works, because I would imagine that if you're sitting with an advisor who's like, I recommend this, it happens through certain channels that don't allow them to scam. But is this something that's an American thing? Like, maybe you can help us understand that part.
Yeah, so I think the FSCA obviously does a very good job of vetting financial services providers. And so the first thing you want is to deal with a regulated entity. Reputation also matters. So if you stick, let's say, with firms or advisors with a good reputation, then typically things go very well. From time to time, you hear of people being disbarred, which means they don't have a license to operate in financial services, and some get disbarment for life, right? So they cannot ever provide advice or work in financial services. So there are serious consequences for people who do that. People who scam investors. But yeah, I'd say the important thing to keep in mind is stick to reputable entities and make sure that they're regulated.
There's a question that says, what are debentures? Have they got value, and who can I sell them to?
Goodness, I haven't heard about debentures in a long time. I mean, these are let's say are debt instruments, and I think we would have to look at the specific debentures that the client has and determine what their value is.
And then we've got a voice note coming through on 072-702-1702 in a moment. Just in terms of the other platforms, I've mentioned an Easy Equity. Where are other places that people can go and trade?
So the banks have got stockbroking divisions. So in fact, all the 5 banks have got stockbroking divisions. So I'd say anyone that wants to access one of these platforms, you've mentioned Easy Equities. I mean, that's just one, but there are others, and banks have got these platforms.
All right, we've got a voice note.
Hi, Relebogile 702. I'm loving the conversation about stock market. Because with me, what I'm using right now is a system called Easy Equities, and it's so flexible. And it is so interesting to actually look at it and see how it works. So much so that I actually took my retirement annuity from some of the big players, and I put it in the system, and I actually control my own retirement annuity, which was one of just the most bravest things I've done, but the most fulfilling as well. But the danger is you need to understand exactly what you're doing. If you don't understand the markets and how they fluctuate, I wouldn't recommend it. But I would recommend it for anybody who just wants to learn about investing and how it works, because it does have a demo account as well.
So, Mike, I mean, what is a good place to start for somebody listening who's like, this sounds interesting, especially in terms of where to learn and understand?
Yeah. So, I mean, for somebody that is listening, I'd say, firstly, I mean, before investing, I think just make sure that, you've got your emergency fund, right? Money for that rainy day put aside. And then you start investing. And we've got many less instruments that make it easy for investors to start investing in South Africa. We've got unit trust funds, where you invest into the fund, it gives you a basket into a range of shares. And that fund is managed by a qualified and experienced portfolio manager. And these funds typically allow you to make contributions on a monthly basis. So that's one way to invest. The other way, of course, is to invest directly in the stock market, where you select, certain shares and you slowly build your investment portfolio. Of course, it's important to understand what you are buying into. I mean, at a very basic level, and again, I'm going to quote my experience here. I mean, in my early 20s, I just took 5,000 rands and I divided it into between two companies that are respected, companies that I had dealings with on a daily basis.
Mike, I'm going to have to do this because we've run out of time. I do think there's an opportunity for us to have more conversations around stocks, because today we're only talking jargon, and then please save that story for us for when we talk, and maybe it's a masterclass on how to start trading and getting into the stock space. Thank you so much.